Hey traders, Raghee here, and in this update I'm going to do two things. I'm going to talk about the bigger overarching topic for this video, which is how does the clock save our day trading? Why do we need to know about something I call the day trading clock? And then we're also going to talk about what today's PPI actually ultimately meant, and that's an easy answer. Almost nothing, right? In fact, when you look at the economic calendar, and I'm sure a lot of you already do that, you know that we had the PPI release, red hot zone, 8:30 this morning. If you look at the 8:30 candle for the S&P or the NAS at that time of morning, you'll notice that very little changed. And what I mean by that is, let's take a look. This morning, by the time the PPI was released, the S&P futures were already climbing higher, and by, as you can see right here, about 750, 755, we transitioned into what I call a double green uptrend. If you're new to the lingo, what that means is it's actually a reference to the visual of the tool. This is either the multi-trend for those of you who have taken some of my classes which include this tool, or you're in my mastermind where this tool is included, or the free version I make available to members. You'll see that in the room drive of the options room, the futures room, my mastermind, as well as the options, futures, day trading room. We've got those available there. All right, so you got your double green confirmation of a trend. That means on the open this morning, gang, no shorts. Have that directional bias. Have that preference where, all you're saying to yourself is there is a path of least resistance. We inherited it from early in the morning, and PPI changed nothing. Not only did it not change anything on the chart, it did not change anything on the target rate probabilities either. If you watch my Tuesday free video, we dove into this conversation, so an update to that. Check out that video if you didn't already. It's at the Simpler Trading YouTube channel. And what was that called? That's right. My awesomely titled, Losing Well is the Skill. I was telling folks in Charts and Coffee, I said, it's always interesting to see, what kind of title folks click on. I said, I'm going to put a losing title and see if, people actually realize that losing well is the skill, right? And for folks who understand that being a trader is primarily about risk control, position sizing, risk management, position sizing and risk management, that is the holy grail. There's no secret squiggle. That's the holy grail. There's no strategy. That's the holy grail. It's risk management and position size. In fact, every now and then, I don't know if you've ever noticed it, when they televise all those hedgy get-togethers and one hedge fund manager is interviewing another hedge fund manager on television, they'll talk about their golf game and positions and what they see the Federal Reserve doing and things like that. But slowly, one or the other will kind of angle into position sizing and risk management. And all of a sudden, that manager will clam up because that person knows that's the secret sauce, right? So if you didn't check out Losing Well is the Skill, I talk about losses because we have them. Heck, I had one today. Or did I have one today? Oh yeah, we did have one today. So let's talk about, I'm trying to think what we did for our trades this morning. I'm trying to think of the loser that we had today. No, actually I didn't have a loser today, but I did have a loser Wednesday. We did have, I went 1 for 3. You're never going to hear anyone talk about losses like me. You know why? Yesterday I went 1 for 3, and that would have been a really good video, but it wasn't my turn to do the free video. Went 1 for 3. I lost in crude oil. Then I had my last trade was a bond trade. That was a loser, but in between, we had an S&P buy. Paper cut. I mean, frankly, y'all know what the S&P did yesterday. Grand slam. Why did it matter that I only went 1 for 3? I like a much better win rate, and that's actually a pretty bad one for me. Today we went 2 for 2. 2 wins, 2 trades. But yesterday, gosh, this is so much more interesting. By keeping the risk small, by knowing the point of validity and having the discipline to stick with it, I took 1 quick loss S&P was well on its way, and then I had one other quick loss. When we're able to find the point of validity in the trade, and we know the risk is the chasm from the entry to the stop, and we can have the discipline to follow that, and not the hopium to hope that it's going to keep going in our favor, we can continue to manage the winners. And so this was just an outsized, fantastic day, even though I went 1 for 3 at the at-bat. Anyway, today we went 2 for 2, so no losers to talk about, but I do want to talk about the day trading clock. This is going to save your day trading, even as we go into the fall session. I want everyone to understand this because this is really going to help, all right? Okay, so we know that 8:30 is the PPI number. I don't encourage traders to trade it, but it will echo forward into the opening bell. So if we saw some volatility at 8:30, when the bell rings, don't be surprised if we see something sort of similar in terms of volatility. I call this the echo. When we have a 8:30 hot zone, remember, only futures and Forex traders can really do anything about this. Then the Wall Street bell opens, and then stock traders can sort of react to that data that came out an hour earlier. We had almost 20 minutes of an opportunity to buy the 34 EMA wave. So a little volatility with the echo, and that echo gave us this opportunity right in here to buy in the wave. Okay. Now, why does time matter? Well, I understood the time volatility here, knew that it would echo forward at the bell. Okay. Next thing, and this is really going to, I think, help out a lot of you that are new to day trading or day trading through summer, as I have been with the Futures Room and my Sector Secrets Mastery. Put a soft cutoff at 10:35 a.m. Eastern. Look for opportunities between 10 and 10:30 and then 10 to 10:35, but put a soft cutoff at 10:35. If you're going to take a trade for the remainder of this month after 10:35 a.m. Eastern, make sure it is a textbook setup. Because what's happening is a lot of traders feel, especially when they see the kind of action we saw yesterday in the S&P where it just kind of grinded higher all day. And then all of a sudden traders realize, oh gosh, maybe I could buy something in the morning and just ride it higher all day. I wish that were the case. But the truth of the matter is you're going to deal with the clearing range psychology, the psychology to about 10:35, the cutoff at 11:30, the midday doldrums that are going to take you to about 1:35, and then basically the final second half with a PM session, which I trade to 3:50 p.m., if at all. We could really see up to 4 or 5 different slices of psychology throughout a day trading day. So really this idea that we could set something up in the morning and like Ron Popeil would talk about, set it and forget it, that's not the way. I wish day trading worked that way, but because we have the day trading clock, because volatility is going to change hour to hour, because different financial centers are going to open and close, we have a lot of different psychologies throughout a single U.S. Wall Street session. All right. Think about, and here's a little homework, if you will. And, if you want to let me know, leave it in the comments. What is your best segment of the day? Are you one of those traders that trades really well into the close? That's not my power band, to be quite frank. There are some cool trades that I'll look at between 135 and 350, but not very often. Is your best, maybe pre-market? Are you great at the 7 to 9:30 window? Maybe you're a lot like me. That 9:30 to 10:30 is your bread and butter. What's your best day trading time? And maybe you've never looked. Look at your winners and losers and look at what time you entered the trade. You're probably going to see some trends in the types of results you get based on the time of day that you entered. Think about the day trading clock, gang. We'll revisit this concept again. Thanks as always for watching. Thanks for smashing that like button. And I'll be really interested to see, when do you day trade best? Leave it in the comments. Looking forward to seeing it. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.